If you follow the news, the crypto world can feel like this chaotic storm of headlines, price alerts, and just a ton of jargon. But what if we could filter out all that noise? If we look at the raw data, a much clearer and frankly more interesting story starts to take shape. And that's exactly what we're going to do today. We're going to try and answer one simple question. What is the real signal underneath all that market static? Because, yeah, the minute-by-minute price action gets all the attention, but it might not be the most important thing happening at all. So, here's our game plan for getting to the real story. First, we'll touch on that familiar chaos, Bitcoin's crazy pulse. But then we're going to look deeper. We'll uncover this quiet trend of corporations buying in and see all the new infrastructure being built to support them. And finally, we'll connect those dots to reveal the bigger picture. All right, Section 1, the familiar chaos. This is the part of the crypto story that pretty much everyone knows. It's the part that dominates the headlines and fuels endless debate. It's all about the price. So let's just take a quick snapshot from our source data. On this particular Wednesday, you've got Bitcoin just kind of floating around $63,200. The market feels pretty steady, almost calm. But then, boom, not even a day later, it drops below 62 grand. This kind of daily up and down is what defines crypto for most people. It's exciting, it's nerve-wracking, and it is absolutely constant. And what's driving all this? Well, the headlines point to things like investor caution over economic data or a massive $1.5 billion derivatives wipeout. This is the story you always hear, but honestly, it's just the surface noise. Let's dig deeper and find the real signal. Okay, let's move on to Section 2, because this is where it gets interesting. Corporations are buying in. This is the underlying pattern. See, beneath those choppy waves of daily prices, there's this powerful current moving in one very clear direction. Check out this list. It was pulled from just a few days of news, and it tells the real story. These aren't just crypto startups. We're talking about Fattel, an equipment company, Iveda, an AI and smart city tech firm, even Silo Pharma. These are mainstream businesses, and they are all publicly announcing moves into digital assets. This isn't a fluke, it's a pattern. And look at how serious these moves are. Fidel isn't just, buying a few tokens for fun. They've launched a full-blown digital asset treasury on Solana, and it's backed by a $100 million financing facility. That's a strategic, structural commitment. And this is really the key insight. It goes way beyond just purchasing some crypto. You've got Iveda's board authorizing acquisitions for its corporate treasury. You have TNL Mediagene making its entire digital asset strategy public. The conversation is shifting from if to how corporations are going to integrate crypto into their core financial operations. Which leads us perfectly to our third section, building new crypto infrastructure. Because for all these corporations to buy in, there has to be a strong ecosystem to support them. And right now, that ecosystem is expanding at a breakneck pace. And this growth is incredibly diverse. You see it in new partnerships, with crypto exchanges like BTC teaming up with NBA All-Stars. You see it in new products, like the exchange Bybit now letting users trade derivatives based on traditional stocks. We're even seeing companies start to put their actual shares on the blockchain. And, of course, there's the money. $20 billion. That is the staggering amount Tether, the company behind the world's biggest stablecoin, is reportedly looking to raise. Think about that. This isn't just about funding some new app. This is about capitalizing the fundamental plumbing of a whole new financial system. And this isn't happening in some isolated bubble either. We're seeing established crypto giants start to reinforce each other. The Bitcoin miner CleanSpark just got a $100 million line of credit from Coinbase, and it's backed by its Bitcoin holdings. The big players are building bigger, more resilient foundations. So let's bring it all home with our final section, the bigger picture. We've seen the surface noise, and we've seen the deeper trends. So what does it all mean when you put it together? Well, it points to this profound shift from pure speculation to real, deep integration. This right here is the fundamental takeaway. The old narrative, the one driven by those daily price swings, was that crypto is basically a digital casino. But the emerging reality, the one supported by all this corporate adoption and infrastructure development, shows crypto is becoming a foundational layer for business and finance. So, ultimately, it means there are two stories happening at once. You've got the loud, daily noise of price volatility, but running parallel to it is that quiet, steady, and I would argue more important signal, the signal of deep and irreversible integration. And this leaves us with one final, pretty powerful question to think about. Are we witnessing the moment crypto stops being just an alternative to the traditional financial system and starts becoming the next layer of that system itself? Based on the signals we're seeing, that's a future that's getting harder and harder to ignore.